Good afternoon. In this video, we're going to go over this week's options watch list. Before I get into the video, if you're not in the room, you can find the link in the description of the video and in my bio section on social media accounts. Also, please like the video, subscribe to the channel if you haven't done so already. Now, with that said, the watch list really is not going to be that big because FOMC is this week. But before we get into that, I want to look at the put-to-call ratio, which is right now at 0.76. It's not really that high, not like we were having like back in November, December when we were like over 1.3. We're at 0.76. We're really not that high, so nothing to see really there. Now, as the economic calendar for the week, let's see. Monday's the first day of May. We have ISM manufacturing PMI at 10 a.m. on Monday. Tuesday, we have JOLTS job opening report at 10 a.m., which the Fed really looks at that. That's it for Tuesday. Now, Wednesday, we have PMI at 9:45 and 10 a.m. Then we have FOMC at 2 o'clock. Then we have Powell at 2:30. So this is going to be an expensive SPX FOMC day. I usually like the ones Powell does not talk at because you can buy SPX at the money for like around $6-7, and if it moves $1, they'll go 100% very, very easily. Versus when Powell speaks, depending on how much implied volatility there is at that point in time, you could be playing a 100-point spread, and you need a pretty massive move just to get it to go 100%. So I do not like the FOMC days with this Powell because you have to play too far out of the money and too much of a spread. They never used to be that bad, but just in the last couple, let's say, year or so, with the interest rates being increasing interest rates, it's just the market volatility is just more, and the implied volatility is more, and just costs more. So back 2 years ago, when Powell would speak, you could still get him a few, maybe a 50 point spread, but now it's been 100 plus just because of it's just so expensive. So we do have Powell. So the good thing about the Powell days is we'll have at least 2 to 3 moves. We'll have the statement move at 2 o'clock. We'll have the Powell move at 2:30. Then we'll have another end of the day move. Sometimes we get 3 to 4 moves on days like this. We'll have to see what happens. We'll just play it accordingly. That's why you need to be in the room. FOMC day is a fast decision kind of play. So if you're not fast and don't know how to play FOMC, just sit and watch because they are kind of they're fun to play, but they also can be very intimidating if you don't know what you're doing. Now, as far as on Thursday is for, we have our unemployment claims. Nothing else. Friday we have non-farm employment change, unemployment rate. Then we get back to the FOMC people talking. We have Cook talking at 1 p.m. So economic calendar, could be kind of a busy week on that, especially with FOMC. Now, as far as earnings, the only big ones that we have is we have AMD Tuesday afternoon. We have Apple, Spotify Thursday afternoon. It's kind of weird how Apple held off an extra week. Usually Apple reports the same day as Amazon for some reason. They have been in the past, but for some reason it's not this time. So they held off a week. I wonder why that is, but whatever. I don't know. Don't really care, but it is what it is. Now VIX right here. VIX is at under 16, and the closer it gets to 14 or even under 15, this thing is probably due for a pop now. Fact that VIX is very, very low going into FOMC leads me to believe that the market's going to end up dumping, but the market could dump before FOMC. Something could happen because we get a lot of things going on with China, Russia, and Taiwan, and the banks failing, and other unknown things could come up, and the market could end up dumping tomorrow and Tuesday, and FOMC could come out, and FOMC could pop and make everything, make VIX drop. So it's going to be very, very, very crazy. But if the market just chops and keeps grinding up and VIX keeps grinding down, I think that we're going to end up seeing a dump on FOMC based on just how things are right now. I'm not saying go out and do a bunch of buy a bunch of stuff. Don't do that because anything can happen. Something could happen tomorrow, middle of the day. Another bank could fail, and the market could end up really tanking, and VIX could end up popping. And then the FOMC day, SPY is deep red, and VIX is very green, and FOMC could come out, and the market could pop, and VIX could drop. So. But I'm just saying, if the market keeps grinding up, and VIX keeps grinding down, into Wednesday, I think that we're going to see a dump on FOMC. But I could be completely wrong. But that's my thinking as of right now. I mean, because it could get underneath 15, but I mean, it doesn't usually stay under 15 very, very long. It usually ends up popping very shortly after. So it could dip below 15, then quickly end up bouncing. So that's why I think FOMC is going to be a dump based on right now. But also keep in mind that it can go below 14. Back, take it out a few more years. See, back below over here, it was, so this is what I'm basing it off from right in this area right here. But back over here, we used to go down to, before COVID, we used to go down to under 12, even 11. So that is definitely within reach if SPY keeps grinding up or even chops, because the SPY can chop and VIX can get smashed. So under 14, I think that we're going to bounce, but it can go as low as 12. So do think about that. 14 is not a solid floor. It is for a temporary, but solid would definitely be 12. But I don't think it will get that far. I don't think it can get to 12 with all the uncertainties going on. But who knows? It is what it is. I'm not gonna try to predict the future because I can't. So that's my thinking on SPY, on VIX, on SPY. SPY, we're right up here at this 416 area. You know, we look pretty good for a breakout, and this could be the ultimate trap right here. VIX is so low. We're at the trend line for a breakout. Inverted head and shoulders on the weekly with the left. Got the head, and we get the massive right shoulder. It's still valid. The only thing that's going to invalidate the inverted head and shoulders is coming down to 360, but I don't see it doing that unless something major happens. But this could be like the mother of all fake outs right here. We could pop 420 going into FOMC, and then everyone thinking we're going to halt rates, or we're going to pause rates, or we're going to have a rate cut, or something could end up happening, and then we could end up dumping. So this could be a huge fake out for the market. And I don't see, you know, the market going to raging up to 420 or even 425 going into FOMC and raging more, because I think VIX will be too low and the market's gone too far. I think something's going to end up happening between the time, or the FOMC is going to be the trigger that ends up changing the market direction. So a lot of ifs and unknowns going right now, but to me, I still feel like this is going to be the mother of all fake outs right here. They're going to get everybody in calls. Everybody's going to be on that side, and it's going to pop in enough to get people more confident in their position and loading up calls. Then they're going to end up just dumping it. So we'll have to see if that happens. That's my thinking as of right now. But if the market does tank tomorrow or Tuesday, that's going to change the scenario for in a lot of ways. So I would watch SPY over. Well, I mean, it depends if it gaps up. I'd watch it over. I mean, we're at high a day on Friday. Let's say 417, even 418 for push to 420, 425, and we get a push to 420, 425. That should put VIX well below 15, maybe even closer to 1450, and that would be a prime area for something to happen. Now, if the market does pull back, For some unknown reason, the news that happens overnight or during the day, I'd watch another 414 for a push down to the 410.50 area that's been holding for a very, very long time. Likely will bounce there, but we get a gap that needs to be filled down here, the 406 area, and we get this 404 area right down here that's been getting bought. But we get gaps to fill down here at 398, so keep an eye on that. So we'll have to see what happens. So SPY, it's going to be taking it day by day, news by news, and that's why you need to be in the room, because we get the scenarios played out. It's just we don't know which one's going to happen. Is it going to dump Monday and Tuesday and then rip on FOMC, or is it going to rage into Wednesday or chop hard up to the 420 into Wednesday, and then when FOMC comes, then we end up dumping? That's my opinion. I don't know if that's going to happen, so that's just how I'm thinking right now. Now Meta is another one I'm looking at. Now Meta, it keeps doing this. It keeps having huge earning gap ups. Just get major gaps to fill. I mean, it's going to gap down here at 153, gapped up on earnings. It's doing the same thing up here, big gap up, chopped for a few days. Then it did break down. It didn't fill the gap, but it came back down to the one, like 50% of the gap fill. So I'm thinking the same thing we're going to see here as we are over here. We could probably chop over the 235 area for the next couple of days. But if it does get underneath 235, I'm looking for a pullback to at least 230, maybe even 225. That would be 50% of the gap fill from the earnings run up. Now it can go all the way down to the 209, 210 area, or even down to the 215 area and fill the gap. So we'll have to see if that actually does happen or not. But that's my thinking. I'm thinking the same thing. Chop, drop 50%, chop, and gets down to 50%, which would be around 225 for Meta. On that one. So that's what I'll be looking at on that. Plus also it's outside the Keltner channel on all the weeklies here and here. It did get underneath a little bit, but then it raged out. Now it's well outside the Keltner channel, daily, hourly, and weekly. So usually it likes to pull back. NVIDIA, still outside the Keltner channel. Still chopping in this area. I know it's got earnings coming up in the next couple of weeks or something. It's probably it could possibly just chop until earnings, and earnings could be the catalyst or the event that happens to get it to drop to 225 or something, get back in the Keltner channel. I don't know. That's just, we'll have to see if that happens. That does not mean go out and buy puts with that, because it could definitely keep going. So nothing is ever 100%. This is still my theory right here. As of right here, it's still chopping outside that Keltner channel over here, then it dipped back in to get down to the middle Keltner channel, which is this white line. I'm thinking the same thing's going to happen. It's just a matter of when. I mean, it could be this week, it could be a couple weeks, it could be a month from now. I don't know. Roku and Baba and Baidu did the same thing. It took like months for that to play out, but it did end up playing out eventually. So Tesla is another thing I'm looking at. Oops, wrong Tesla. There we go. Dropped down from earnings and it's back up to gap, close to gap resistance right here at 160. 164 gap resistance is technically right up here, although 170, but I'd be watching it over 165 for push to 170. If it gets to 170, we probably could see it try to make a gap fill run, but I would think that if it gets to 170, it might stall out a little bit and then have a follow-up day where we'll actually fill the gap if it has continuation. But definitely keep an eye on Tesla to fill the gap this week. That's what I'm looking at. So on that one, Microsoft is one that I'm looking at too, outside the Keltner channel. Not a full body candle though, just the actual high itself, but the full body is out on the daily. RSI is well over 80. Well, it's 71 now. It's it's coming down a little bit, but the daily it's almost close to 70. So anytime it gets a full body candle outside the Keltner channel, regardless if it's the daily or the weekly, it's something that I look at, because right here outside the candle Keltner channel and it came back in right there. So we could see this kind of a move right here. So I watch Microsoft underneath 305 for push down to 300, even down to 295, which is going to end up being gap support. And that will line up good with the RCT trend line and on the hourly. So have to keep an eye on that. Now BA is still stuck in this weekly channel right here. Big bull flag. You can look at it like that. It's just a weekly chop fast from what, 215 to 200 for the entire year this year. It's just crazy how it's still sitting there. I mean, I still think, if it keeps bouncing off the 20 EMA, which is the middle Keltner channel on the weekly, the more it just keeps doing it. If it gets over this 215 area again, I think that it could possibly end up making a run. I think it's due for the run if it can get over that. But if it can't, if it gets back underneath this we can even say 200, or even if you want to play it safe, 195. It gets below 195, then it could end up falling apart. So those are the two areas to watch. If it gets below 195, we could end up seeing it dump to probably even down to 190, 180. But if it gets over 215, we could end up seeing a push to 220, 230 on BA. So we'll have to see what happens on BA. So lots of crazy things this week. It's all going to be dependent on what happens with FOMC and the news that drops. If other banks fail, and in Taiwan and China something develops, or Russia does something crazy, or anything else develops over the week, it's going to be probably a crazy week. That's why you need to be in the room, and we'll just take it day by day and make decisions based on what is happening. So that's going to do it for the watch list. Thanks for watching.